I have a personal umbrella policy for me and my family. I think it's like $120 for the year, and it gives me an extra $1 million worth of coverage in case I'm driving around and I wreck into a doctor driving a Rolls Royce who makes $500,000 a year, and then now he can't work for 3 years. My auto limits will be exhausted very quickly. Now my umbrella is there just for, peace of mind.
Welcome to the Going Long Podcast. We're back once again to continue to help to educate you so that you feel much more comfortable as well as confident investing beyond your backyard. And yes, I am your host, Billy Keels, and I am so excited to welcome you back for another conversation. These conversations get better and better, literally every single conversation. I love it. And I appreciate you being back here. You continue to invest your time with us, your energy with me and the guest is just absolutely fantastic. So, and one of the things that continues to happen is, I mentioned it over and over, we do continue to have more and more downloads. We continue to rise up the charts together, largely in part because you take today's conversation, you take every conversation, you're talking about it with family, with friends, and you are becoming a much more knowledgeable investor, which is great. And you're also taking time to share your honest written reviews as well as ratings. If you've not had a chance to do that yet, would really appreciate you doing that. If you don't know how to do that, especially on the Apple Podcast platform, we've made a little video. You can check it out and leave your honest written review as well as rating. Really appreciate that, because we're working on making this podcast the absolute awesome go-to podcast that you have twice a week. So with that, also too, if you're looking to find past episodes, you can go to billykeels.com. When you get there, there's going to be a little change in the screen. You're going to want to go to the podcast tab, and you can find every single one of the podcasts. Over 200 episodes that we have released, helped us to get to the top 1.5% of podcasts globally, which is awesome. You are part of this family. We really love the energy. We're going to continue to do that. And this is a way for you to find every single episode, audio, video, things like that. So, and then lastly, I know a lot of you continue to want to know more about this. What is this accredited investor club? Just send an email to aiclub@billykeels.com and we can have the conversation. There's a lot of really cool stuff going on, especially for those of you who just got crushed by taxes from your W-2 earned income. Like, you don't have to go through that by yourself. There are really great options for you to find out about, especially if you are a high wage earner, you are getting crushed by taxes. Definitely send the email, aiclub@billykeels.com. Would love to have that conversation with you. So speaking of which, I want to just talk to you about today's conversation. So this is one of the conversations that we have not talked a lot about. This is something that will impact you as an investor, whether you are an active investor, you are a passive investor. It is the whole risk mitigation strategy, and specifically how insurance plays its role in that. Today we have a guest who is going to talk to us about how you want to take into consideration insurance. Some of that we break down like 3 of the different types of insurance that are specifically related to commercial real estate. Also talk about some things that you can also consider from real estate or from insurance coverage perspective. I don't want to give too much away because I want you to hear it, but also you can think about, what are your premiums and deductibles? What does that need to look like, or what could that look like? So that ultimately you are a more informed investor, which means you are able to do the things that you want to do because your investments are working in the most appropriate fashion, and you get a positive ROS. If you haven't heard what I've talked about that before, it's a positive return on sleep. Today's conversation with our guest, JT Lynch, is going to help you make sure that ROS is positive. You can sleep better at night, and we're going to get to that just after this. Are you looking for a way to get to long distance investing success, but not spending all the effort? You want to do it in a way that's much faster and it doesn't cause as much pain? Well, listen, I can save you all of that stress. Just go to billykeels.com/7 mistakes and you can pick up your free PDF to help you on your road to long distance investing success. You know what? If you want to know how to assess risk so that you can properly manage it on your long distance investing journey, then guess what? Today's a conversation you're going to want to listen to until the very, very last word. You know why? Because today's guest, listen to this, not only did he study exercise and sports science right out of college, right? That's what he studied in college. Get this. He then actually went on to get started in a sales career in the professional lawn care space with a market leading firm. He may tell us a little bit more about that, or maybe not. It's up to him. He also spent a few years in the energy space, which is music to my ears as well. And today, he's a commercial insurance broker for Ramey King, who is a brokerage firm that covers 48 states in the U.S. and probably a little bit more than that. And I'm sure he'll tell us a little bit about. And it gives me great pleasure to welcome to today's conversation, Mr. JT Lynch. JT, welcome to the show.
Yeah, thank you so much for having me. Happy to be here.
All right, man. This is really, really fun. Loved our pre-conversation. And I know that you're going to add so much value to the Going Long family today. It's going to be absolutely awesome. You make a topic that, well, I maybe talked about it a little bit, but not too much. You're going to make it awesome for everybody.
It's one of those necessary evils, right? It's just like, yes. I want to know as much as I can about it, but gosh, I don't want to talk too much about it, and I definitely don't want to pay too much for it, right?
Well, you know what? But when you need it, you definitely want to make sure that that you knew what you were getting yourself into, and that you've got everything that you need. So, and I know you're going to make it exciting for everybody. So I'm looking forward to that. At the same time, you know, JT, and you and I talked about this before. I ask everybody the same 5 questions. You're going to get 2 in the beginning. You're going to get 3 in the end. In the middle, you're going to get a lot of questions from me as well. I have no idea what those questions are, unfortunately for me and for you. But hey, listen, I know you're going to add lots of value. So the first question that I really would love for you to help us understand is, where do you live in the United States?
So I actually live in the suburbs of Dallas, Texas. If you know anything about Dallas, most people don't live in the city. So whenever somebody says Dallas, they probably don't live in Dallas. They probably live on the outskirts, like Frisco, Grapevine, something like that. So I live in one of those suburbs, and my office is located in Denton, which is 30 minutes north of Dallas.
All right. Which is just like in Dallas, it's like literally almost Dallas. So 30 minutes is nothing. Perfect. So appreciate you sharing that with us. Then also too, JT, I'd love for you to share with us, like, what's the most positive thing that has happened to you in the last 24 hours?
That's a really good one. So 3 weeks ago, I was in a tournament, a basketball tournament called Hoops for the Homeless. And it's a tournament that Old Capital Lending puts on every year. And so my company had a team, and we entered. I think they raised something like $50,000 for homeless here in Dallas. But while playing basketball in my last game in the second half, I ruptured my Achilles tendon. So I haven't been able to walk for a while. I had surgery a couple of weeks ago, and yesterday I got in a walking boot, and I'm actually walking around my house now. And my wife is pregnant. She's due June 30th. So she's tired of doing things for me, so I can finally do some things for her. So that's the most positive thing that's happened in the last 24 hours.
Well, you know what? When you started saying that you ruptured your Achilles, I was thinking, well, no. Hang on a second, JT. I was talking about the most positive thing. So yes, so it is phenomenal that you're actually able to get that boot on, to move around. Yeah. And yes, I'm sure that your wife is really ready to kind of put the
It was so tough because, you know, when I had crutches, like I could get around, but I can't carry anything. Yeah. You know, so we'll be watching a basketball game or something on the couch. It's like, I'll look over at her. I'm really sorry, but I'm really thirsty. Like, can you help me get some water? You know, so that stuff was kind of tough. So now we're starting to get back in the groove of things. So it's really exciting. You take walking for granted when you can't do it. Everything is hard. You know, going to the bathroom, just going to the kitchen to get something. You know, it's ridiculous. So I'm pretty pumped.
Well, I'm glad that these positive things are happening for you. That's fantastic. You're also part of a tournament that helped to raise capital, and, you know, investing your time, investing your capital to be able to also help others. So that's
we
fantastic.
May have to do ping pong next year or something like that.
Well, you never know, man. You never know. Some of those ping pong shots can get a little a little bit wild as well. But no, all kind of positivity and things like that. I'm glad we can talk about that. But, you know, I try to do something that's almost impossible, JT. Okay. And the Going Long family, they know about this because I try it every single time, and they forgive me every single time. Because, like, I try to tell your whole backstory in like 2.5 seconds. That's impossible, right? You've done way too much. You've impacted way too many lives. They always forgive me. And so hopefully you forgive me for trying to do that. But, you know, I always like to set the bar pretty high, and hey, it is one of these days I'll get it right. But since then, if you could more importantly help me by actually telling your own backstory in your own words, adding the color where you want. But most importantly, if you could also talk to us about maybe some of the major decisions that you've made to get to this point in your journey, and then we'll see where you and I take the conversation from there.
Sure. So, as you mentioned before, which I thought you did a great job, but I went to Texas Tech as an exercise and sports science major. So it's interesting. When I tore my Achilles tendon, the moment it happened, I knew exactly what happened. I've seen the injury before, and the moment I knew that it felt like someone landed on the back of my leg, and the moment I knew no one was around, it was like, okay, I know what happened. So I went to school for that. It was kind of one of those things. I was always involved with sports my whole life. So I wanted to keep doing that. And that was a perfect way to do it. When I graduated, there's not really an exercise sports career path you can take. So I was going to go into physical therapy school, but I graduated in 2008 and the economy was not doing great. So I decided, well, am I going to go for another 3 years in school and then not be guaranteed to get a job after that? So I decided to go out, and that's where I got in my sales career. And it turns out I was good at sales. I never, I'm kind of a shy person, so I never thought that I'd be any good at sales. But it turns out I was good. And like you said, it was for a lawn care company called True Green, where we would go out and treat lawns for weeds and make it green and nice. Interesting, I worked in a call center in that environment. It was great just starting out, but then after a while, it gets rough. You have to be on the phones because somebody's got to answer the phone. So literally every break, every breath, you have to be back at your desk, and so the freedom is not there. Mm-hmm. And I remember one day, you go outside on your break and there's these guys, smoking cigarettes in the corner, just complaining about their job. And I found myself talking more and more and more to them. And then I was thinking, why am I doing this? This is negative. This isn't a good way to live my life. And so instead of listening to them, I said, you know what? I'm really good at this. I like teaching. So I'm going to apply to be a supervisor. So instead of complaining about what I'm doing, I'm just going to better myself. Right. Mm. And so I did. I ended up getting a supervisor job and worked my way up to a sales manager. And that was one of the best decisions I've ever made. So back to your point, you don't be positive in everything you do. There's always a good spin. And even the hard parts of your job or your life, use that as fuel to take you somewhere else, or at least a lesson for later on. So that was huge for me. And then because I did that, I was able to get a job in the energy space. It was actually a company based out of Ohio. So your neck of the woods, in Dublin, Ohio. And that company was great. It's called IGS Energy. And the culture there was amazing. And it just taught me that not every company has to be so corporate and just rule, and don't do this and don't think outside the box. We don't do that. We do it this way. They're open-minded. They want to hear everybody's ideas, and they were really good at giving back to the community. And I was like, okay, this is where the space that I want to be. Right. Unfortunately, they pulled out all their branches out of Texas. It just wasn't profitable for them. And what I was doing at the time was I had a door-to-door sales team that I was managing. So we would be outside in the Texas summer, going door-to-door, selling our services. And if you can sell door-to-door, you can sell anything, right? Yeah. And so there, it's a numbers game. You got to knock enough doors. You got to build rapport right off the bat with a stranger that you've never met. And you got to accept a lot of no's. That's just how it is. That really helped molded a lot for me, just overcoming a lot of adversity. And then when that job ended, I worked a lot of nights because you got to be at the doors when people are home, right? Yeah. A lot of weekends too. And at the time, I think I had a 4 or 5 year old and thinking, I was making good money. I was good at it, but do I want to be doing this forever? Probably not. It's probably time to make a career change in a different avenue. And that's where I went to insurance. I started out in personal lines and then eventually made my way over to the commercial space. So I wish I would have gotten here a lot sooner, but all the lessons I learned along the way is why I'm here today. So really can't change much of my past for sure. Well,
and so there's a lot of different things. And I tend to agree with that thought process, right? If you change things in your past, you are a different person than you were today, right? That doesn't mean that you're better or worse. It's just you're a different person. And so
it's kind of hard to regret the things you've done because it got you here today, you know?
Yeah. So. And it's just one of those things people ask, what would you change? Probably nothing. But, you know, there are a couple of things that you said that I believe will resonate with a lot of people. So I also did some door-to-door sales.
Nice.
I actually sold knives door-to-door, which was amazing back in the day.
I've seen vacuum cleaners and
I mean, it's just, we've come a long way. I can't imagine doing that nowadays. But also having worked in sales in an environment where it's remote sales or call center and things like that. But I want to go back to the decision that you make, because I think that that's really important. And sometimes people have these moments, and you had this moment of clarity where you said, well, okay, well, either and I'm going to paraphrase because you didn't actually say this, that you can actually just stay with this group of people and complain every single day, all day. You didn't say that was an option, but you said, well, you know what? You didn't really enjoy that environment. And so you decided to opt the other way. And so a lot of this comes down to maybe how your mindset was and things like that, because people are faced by that every single day. Like, I've come from a sales environment. We've got loads of sales executive, high paid sales executives. And sometimes it's just, you go into this, I'm just going to do what everybody else does. And sometimes there's something in you that says, no, I don't want to do that. But people don't actually go down the path that you did. So I'm interested if you could tell us a little bit more about why you decided, or what allowed you to really feel comfortable enough to go down that path, to go against the grain, to be contrarian and not be like the smokers over in the corner.
Yeah. It's a good question. You know, there's all sorts of quotes that you can see. Like, if you're the smartest person in the room, you're in the wrong room. You know, you need to be in a different room and not be the smartest, because then you're not going to be learning. Right. So similar to that, I think the biggest thing was happiness. Like, I felt myself not being happy anymore and just being depressed. And then, you know, everybody knows that group of people, or maybe you had a friend or relative or something that's just kind of always just kind of depressing, you know, and it affects you. You can do the best you can to help them, but eventually, if you're around, you know, 20 other people that they all think the same thing, you probably need to get out of that environment. Doesn't mean that I think anything differently of them. It's just that wasn't for me at the time. So to help save my sanity and stay happy, I need to make a change. And that was the best way for me to make a change at the time. It was either quit my job and find something else, or find something within my job that I appreciate doing that could better my career. And that's what I chose to do. And it was pretty easy. You know, a lot of people in that group would have said, oh, well, you know, they'll never hire me for this. All I did was go into my boss and say, hey, I'm interested in this. And he said, oh, you'd be great at it. Let me get you in a role. I can't hire you for that right now, but I can get you in a role right now that's, you know, that you kind of shadow and do some things, and you kind of help along the way. You know, you're doing extra things on your time that we're not going to pay you for, but you'll learn. And I said, yeah, let's do it. So it's kind of interesting. You put yourself out there, you never know what you're going to get. Yeah.
You know, you put yourself out there, number one, and then you're willing to do the work. Because a lot of times, I mean, it sounded to me, what you just said was you could shadow, you could watch, you could do things that you were not getting compensated for, and you needed to do the extra work to prove that you could actually eventually roll in or evolve into the role that you were looking for. And I think a lot of times you underestimate how valuable time is, because you can learn new things, acquire new skills, and it's not always about, I'm going to do this only if you pay me for that. Many times you don't grow if you receive money or currency or however you want to look at it.
There's a lot of lessons that can be learned that you're not getting paid for. That's kind of not the point. And I was at the point where I was doing well, so I was bored, you know. I wasn't learning anything new. And if you're not learning anything new, you're dying. So doing extra work didn't feel like extra work. It just felt like, okay, now I'm not bored. Great. Let's go do more things. So it was great.
And so, you know, really that's a great segue to the path in terms of continuing to grow, to continuing to, as you grow, as you learn new things, you grow. If you're not growing, as you said, you're kind of dying. And so I want us to help the Going Long family grow today. And that's really understanding more about some of the different, what I call or would consider risk mitigation strategies, which is in a product or a service. Today, we're talking about insurance. And you talked about also, I guess there's kind of three big buckets in insurance. I guess the way that I think about it, typically you've got your personal insurance, you have business insurance, and you kind of have your whatever special one-off types of insurance. Would that be similar to kind of the way that you view the world?
Yeah. I mean, everyone's got to have their personal lines, their home and auto, which is similar to what you would see in the commercial space. And then depending on what kind of business that you have, I mean, you've got your property coverage, your general liability for the business. And then if you have fleet trucks or you're shipping things overseas and things like that, you've got different coverages for those. So, yeah. Okay.
Perfect. So we've got similar types of buckets, which I think is fantastic. And then, but just at the very, very base, to help educate the Going Long family, when we think about insurance, like especially someone who is a long distance investor, someone who is living in Barcelona, Spain, who wants to be actively or passively invested in Dallas, Fort Worth, right? Mm-hmm. What is the role of insurance just in general when I am thinking about investing my time and eventually investing my currency? Where should insurance be, like just in the basic thought process?
That's a great question. I think that the biggest thing for your underwriting is find out the areas that you want to invest in. So if you're one of these people that say, it looks like the trend is everyone's moving towards kind of the Southeast, which looks like the trend right now, North Carolina, Georgia, down to Florida, and then Texas, Oklahoma, that type of thing. So if you know that those are the demographics that you want to invest in, great. I wouldn't let insurance really affect your thought process there. Do the underwriting that makes sense to you, where you see population growth and all that. And then once you kind of find a spot, just know that, Florida, the insurance is going to be different than if you were in Georgia. Know that the Atlanta area is going to be different than maybe Tulsa, Oklahoma, for different reasons. Florida one, just geographically, there's a lot of hurricane activity and things like that there, a lot of flooding incidents as well. So just know that because of those, the insurance may be a little bit higher than if you were in Tulsa, Oklahoma. Same thing with Atlanta. I know a lot of properties in the Atlanta area, there's some high crime activity. And so the general liability is going to be a little bit higher there. So just know going into it that maybe my premiums will be a little bit higher, but if I do some things to boost my property, better lighting, better fencing, gated community type of thing, better security, then I can improve that property and slowly start to improve the neighborhood. And then now all of a sudden my premiums might go down because now it's a safer place to be. So those are the kind of things that I would think about. And being in Barcelona, it may be a little more difficult because you're not in these cities a lot of times, but just do your homework. It's kind of funny. Obviously, most people know that Florida, I mean, just looking at them on a map, it's going to get slammed by hurricanes a lot, right? But the crime stuff isn't as easy to know, but there's a lot of websites you can look for. And simple things, I had an investor once ask me, I do free estimates before you submit an LOI. I'll give you an insurance estimate. I did one for an investor and he asked me, why is it so high at this property? And I said, well, I entered the address into Google and the first thing that popped up was a double homicide 3 months ago. He's like, oh, it's like, and he didn't know. And so it's like, you did all this underwriting, but you didn't even Google the address yet, So there's a lot of, you get kind of caught in the weeds of your underwriting and caught in all these spreadsheets. And sometimes you just need to look up and like, is this a good area? Would I walk there at midnight, with my family? If not, why? And that doesn't mean that you shouldn't buy the property, but it means that you need to maybe take some extra precautions and plan on some extra CapEx things when you buy the property to improve it that way. So.
Yeah. So this, and I guess just kind of to unpack a little bit of that, or just maybe to play it back, probably more than unpack it, is you want to look at the line item. So when you talk about your underwriting, you're looking to see what are the different revenue streams that are going to be for a particular property. You're going to look at what are the different operating expenses. What does it mean what do you estimate that it's going to take to operate this property? Your taxes, your insurance, a bunch of other stuff, which is going to help you understand as an investor whether you're active or passive, if the numbers make sense. So when you talk about the underwriting, meaning, okay, is this something that seems realistic that can be executed in a business plan? And then based on that, when you're looking at it, either actively or passively, as you start to dig in, you say, okay, well, yeah, let me understand is this insurance line, is that relatively in line with this particular area? Some of the things that can impact that are geographically, where is it located? Because there are different natural events that could happen, whether that be hurricanes, maybe if you're in Oklahoma, that could be, tornadoes or whatever the case may be. But there are certain geographies that will have an impact on the amount of insurance or giving you the coverage that you need.
Yeah, exactly.
And also things like crime can come into effect. Wow, don't you just love this conversation? This is amazing. This is fantastic. And so just really quickly, I just wanted to remind you, for those of you that are looking to create more options for yourself, get there faster, and do that with long distance investing, make sure that you go to billykeels.com/7 mistakes to avoid so that you can avoid all those mistakes, get to your goals faster and sooner. Once again, that's billykeels.com/7 mistakes to avoid. Now back to the conversation. What are some of the things that maybe people don't think about? Because I think those two are pretty, like they think about that, but what's something else that could affect the amount of insurance that is paid on a property?
I think the biggest thing that a lot of people that aren't from North Texas or Oklahoma, when you think of that area, kind of Tornado Alley, you think of tornadoes, right? The chance of a tornado coming through, I mean, we get tornado warnings and watches all the time, but the fact is that the chances of it hitting your property are pretty slim. And then even so, the chances of a big major hurricane coming through and destroying your whole property is very, very rare. So really the biggest risk in kind of the Tornado Alley type areas are hail. Hail, I mean, in Dallas, we get hail. You can bank on it. Big 3 or 4 big storms a year coming through, and we're talking, baseball, softball size hail. And so because of that, there's no roofs in Dallas that are over 10 years old. There's just not. And so if you're not from this area, you may not even think about that because you don't see it. But that's the first thing that you got to look at. How old is the roof? And that the carriers are going to look at that too, because that's going to be the first claim that's made the next storm that comes through, and they're going to be dishing out $500,000 to replace the roofs. So I think that's a big anomaly that a lot of people don't think about, and that's part of the reason in Texas the insurance prices are so high, just because there's so many claims that are made because of that. And then we do get big winter events too. So our buildings aren't designed like they are in Ohio, but whenever a big freeze comes in, like last year, pipes break and things like that, and we're just not built for that. So there's a lot of claims that pay out, and unfortunately they have to recoup those with higher premiums and deductibles. Trying to think of some other things.
I think that actually that gives us a good idea, right? Because it's still in the natural disaster space. However, it just gives us another idea, like things to think about as an investor that you may want to ask either your syndicator or your operator, or if you're looking to invest in a particular place. These are things that you want to keep in mind when you're having these conversations with someone that's helping you to mitigate this kind of risk. One of the other things I think would be really helpful, JT, is if we can also talk about, right? A lot of people just talk about insurance and they say insurance. And so we're talking about the commercial space. And to help us be more informed, like there are different types of insurance. There's people talk about umbrella coverage or your general coverage, or you've got workers' comp. Is that relevant for a multifamily investment that you're making or not? And then there are things you may look at health insurance. Is that even relevant for what you're doing? Or things like endorsements or add-ons. Maybe you could talk to us about some of the different elements that could make up insurance, just so that we're more informed about, okay, well, does this actually make sense or does it not make sense? just so we can be mindful?
Really, for multifamily, there's really three major coverage options that you're going to get. The first is property coverage, and that's protecting the property itself, right? So hailstorm comes through, car hits the building. This is coverage for the physical building itself. The next coverage is a general liability, and that's for, think of we call it like slips and falls that happen on your property. Something that the complex could be held liable for because you didn't secure that hand railing properly enough. Somebody fell and held you liable for it, and then you could be brought into a lawsuit. So that'd be general liability. And then the umbrella is basically an extension of your general liability. So whenever your liability limits are exhausted, say you just went through a huge lawsuit, now you do not have any more coverage. Now what, right? Or most of the time you've got $1 million per occurrence. Well, what if they sue you for $2 million? Well, your umbrella kicks in to cover the rest, so you don't have to pay that out of pocket. Those are the big three items that you'd be looking for. When you're talking about work comp or auto coverage or health insurance, if you were a property manager and you had employees and you were managing that property, that's where those items would come in. The good news is if you're getting, especially an agency loan, your lender's going to tell you exactly the line items that you need.
What do you mean? What do you mean by that? Some people may be lost when you say when you get an agency loan,
like a Fannie or Freddie loan, and so those loans are going to have certain caveats that you have to meet. So certain requirements that you're going to have in order to insure it, because the banks think that this is not your property, this is my property until you pay it off, right? And so I want to make sure that all these things are on there to protect my investment. So the good news is you don't have to do too much guessing. Your lender's going to tell you exactly what you need. And for a broker like myself, we've specialized in multifamily for over 35 years. We'll know exactly what those requirements are going to be, what you're going to need, and get you everything we can at the lowest premium possible but to also make sure you're covered properly as well.
Yeah, and and I do want to come back to this because I think this is one of the dances that happens all the time. Is in that, and it's unfortunate, but I think a lot of times people think, well, how do I just get the cheapest price? I'm not a big believer in that at all. Yeah. But I do want to come back to that. But can we go back to something? Because I think a lot of people hear this term and it's an umbrella and you've got general liability and you started down the track. But can you go just a little bit more granular there? Because I think a lot of time people get it if you say the property. So physically, if something happens to the property, window broke, a ceiling happens, somebody smashes into the door. But the whole thing with the general liability and when the umbrella could potentially kick in, could you give us like a specific example? Billy's walking down the street, I break my wrist or whatever, and kind of so that people get it like really crystal clear as to when one would kick in versus the other?
Sure. So your general liability, in 90% of the cases, you're going to have $1 million per occurrence. So if something happens, say somebody drowns in your pool, well, you have $1 million for that occurrence for coverage. So somebody drowns, whenever there's death on the property, then you're talking a pretty big claim. Maybe they say, you didn't have the proper safety measures at the pool. You didn't have the pool rules listed or whatever. And so then now you're being sued for it. Well, you have $1 million for that lawsuit. If it's $1,001,001, they're only going to cover $1 million for you. Now you have to pay the extra out of pocket. If they sue you for more than $1 million, to keep you from paying out of pocket, that's when your umbrella kicks in. It's to cover the limits over your general liability. Once those are exhausted, that's when your umbrella kicks in to cover the rest. A lot of people think umbrella is, oh no, that's something over everything that covers everything. And no, not necessarily. It's there as extra liability for once your general liability limits are exhausted. You'll have $1 million per occurrence, but you'll have a $2 million aggregate most likely. And an aggregate means basically you get $2 million for the policy term or probably a year. So you can get sued for $1 million twice, but no more than that. So what if you get sued 3 different times? Well, then your umbrella kicks in to cover the rest. Again, your lender's going to tell you how much your umbrella you need. It depends on the size of the property. The more units you have, the more people you have at your property, the more families and friends that are coming to visit the property, and the more chances that a lawsuit could happen or somebody could get hurt. So the bigger the property, the bigger your umbrella needs to be. But the good thing about umbrella policies is they're fairly inexpensive. We talked about personal lines earlier. I have a personal umbrella policy for me and my family. I think it's like $120 for the year, and it gives me an extra $1 million worth of coverage in case I'm driving around and I wreck into a doctor driving a Rolls Royce who makes $500,000 a year, and then now he can't work for 3 years. My auto limits will be exhausted very quickly. Now my umbrella is there just for, peace of mind. I add that into my budget every year. It's pretty cheap. It follows me around the world anywhere I go. And so it's definitely a good thing to look into for sure.
Yeah. And so I really do appreciate you breaking that down for us, right? Giving the example, because a lot of times, and once again, as a going along family member, what this is doing and whether JT is helping you is to understand really what are the things that you should be looking for, could be looking for, either if you're looking to buy that next larger commercial property, or you're looking to invest your capital with someone else. It just helps you to understand if you're asking the question about the umbrella policy, your syndicator probably wants to talk to you first about the general liability that they have. And in the event that the general liability does not cover that you have X amount. So what JT's helping you to understand is what's the language that you want to be listening for? What are the types of questions that you can ask? Because it also helps you to be a much more informed investor. It doesn't mean that you're trying to become the insurance broker. No, that's what JT's here for. What you're here to do is ask better questions so that you can get better answers, or understand that the person in front of you either knows exactly what they're talking about, or you should probably start to look for someone else to help you on your way forward so that you can get the right team members on board, right? And also too, and I should have probably said this before, JT, but what JT is not giving anybody advice, he's giving an example. And so this is why it's important for you to have the team member have someone on your team that understands insurance, that can help to guide you and have the exchanges with you. Because I'm going to guess, JT, you don't know every single thing. You're an expert in the area of insurance, but if you don't know it, someone within your team, your organization can get the answer for you in a way that will help the investor in a reasonable time frame. Yeah, absolutely. And there's the insurance space. I mean, there's a reason there's insurance professionals, right? There's so much that goes into it. And things change every year too. So there's all sorts of different caveats. I know after September 11th, now they came out with a new thing called TRIA, right? Or terrorism. And well, what is that? And so that is basically if something were to happen to your property that's deemed a terroristic act, well, then it's not covered. So now you can buy TRIA or terrorism coverage. It's usually very inexpensive, and now that's covered. It's very vague because, does the government have to deem it a terroristic act? When does that happen? It's there now, but it's still pretty vague for all of us. But when I say very cheap coverage, I mean for a 150 unit complex, it could cost you $100 extra. You know what I mean? So a lot of times it's like, just get it. Will you ever use it? Probably not. Just get it anyways. So those type of things, I'm happy to help answer any questions you might have. To your point about investors, maybe even passive investors, not really in control of the insurance, but want to know what's going on. One of the biggest factors in premiums is your deductible. So say you're in Dallas, and we talked about the hailstorms that come through. Insurance is pretty expensive here. Right now, if you saw $600 to $800 a door, that's pretty common. And so one thing to lower the premium is to increase your deductibles. So if you increase your deductible maybe to 5% wind and hail coverage, well, your premium's going to go down, but what's your deductible going to be when that next hailstorm comes through and you need a new roof? So if I was a passive investor, that might be a question that I ask to my KPs is, the insurance you said is going to be this price. What is our deductible at? Because the next storm that comes through, now all of a sudden they're not going to be paying out their passive investors because they have to pay for this deductible. So might not get any returns for that year just because they have to pay for that. So that's definitely something that I would look at as far as the premiums. Just ask what the deductibles are. Yeah, and that's golden. Let's take it to platinum level advice, right? Or insight. Let's say probably a better word, insight, because at the end of the day, this is about understanding when you place your trust, meaning your time and your energy and your capital with someone else. Make sure that you get a positive ROS, everyone. I talk about it all the time. It's the one metric nobody talks about. It is the positive return on sleep. If you do not have a positive return on sleep, meaning that you know what the potential risks are and what the potential upside is, then don't do it. If you understand that, then you can sleep well at night. Then guess what? You go ahead and do it, and you understand this is just another great question to ask, understanding how the deductible and the premiums could affect a potential payout. Understanding where your location is, if it's higher crime, if you recognize that that's taken into the different policies, if people tend to slip and fall more frequently. These are all things that you want to understand, as JT was talking about in the very beginning, when you're looking at your underwriting, or basically the probability of being able to accomplish what the business plan sets out. So
And I've got operators that of all kinds. It's really about your risk tolerance. So I've got some clients that no, I don't care what the premium is. We want the lowest deductibles possible. I don't want to have to pay anything when something happens. And I've got some that are like, let's let it ride, But I would want to know, if I'm investing in a Florida property, if you're on the coast in Florida, you'll have a separate deductible for a named storm. And a named storm is just that. If the storm gets big enough that it has a name, then it's a named storm. And so that's a separate deductible, even a separate line item. So you've got Hurricane Irma or whatever that comes through. Now, if that does damage, now you have to pay a percentage of your total amount for that. And I've got some owners that are like, yeah, let's do a 5% named storm. I'd want to know that if I'm investing in that property, because basically at 5%, you're self-insuring. And you're just hoping that named storm doesn't come through and do significant damage. And as an investor, that would be the first reason why you wouldn't be getting your payouts, right? And the first reason that they're saying, hey, we've got to change our whole way of looking at this and maybe refinance early or whatever to offset that. So those are things that I would definitely look at.
Great insight. I really appreciate that. JT, I can't believe we these conversations go by like super fast. And the thing is, we kind of got to get into what we call the going long final three. Sure. And I never will ask you the going long final three unless you tell me, because you're our special guest today, that you're ready for me to ask you. So are you ready?
I'm ready.
All right, here we go. So we started with you over in Texas, in the Dallas area. And I want to kind of bring it back to this side of the pond. Now, originally, as you know, I'm from Ohio, but Europe's now my new adopted hometown, in Barcelona specifically. But if you can share with us, JT, what's your favorite European city that you've either visited or is still on your bucket list to visit?
Yeah, I've got a few. Dublin, Ireland, for sure. Dubrovnik, Croatia is great. But I got to say Sevilla, Spain. So I did a study abroad in Spain in college. And so I lived there for a summer, and it's beautiful. It's all of Spain. I love all of Spain, but Sevilla has a special place in my heart for sure.
Right on. Well, that's music to my ears as well. So that's cool. So I'm going to take Sevilla, which is cool. It's actually a pretty big week there last week, but awesome. So we will take that, and I love the other cities, but we're going to add that. And so everybody, you can find Sevilla, Spain in the show notes today. So the second question that I have for you, JT, really has a lot to do with the experience that I've had with really successful people. I would consider you to be someone who's very successful. You're out consistently helping others to achieve their goals, get closer to their goals much faster. And so, yeah, I'm sure you will agree with me as someone who is a successful person that one of the reasons that people are successful is because, unlike most people, really successful people have a plan and they get it right the very first time that they do it. And that allows them to... Did I just say that? I can't believe I just said that.
So you mean they have a plan and don't necessarily get it right the first time?
No, it's a joke. It's a joke. It's an inside joke with me and the Going Long family. And thank you for trying to help me. Thank you for trying to help me. JT's like, oh my God, help him. You guys can check out the video. Plus he's got a really cool background. No, Joe. So here's the thing, JT, that's not true. Like, that's just not possible. Like, successful people, they're just like everybody else. They make mistakes.
Sure.
The reality, JT, is that really successful people, they are like unlike most people, in that they make a lot of mistakes, like a whole lot more, probably 20, 50 times more than most people. But the reality is that they do one thing very, very differently. And that is every single time that there's a relevant mistake, JT, without a doubt, they stop, they take note of what happened, and then they place different strategies, tactics, and actions to minimize the probability of that exact same thing happening again.
Right.
So now, all joking aside, if you don't think about the mistake or the learning opportunity or however you want to call it, but think about what's the one lesson that you took away from that learning opportunity that you know that the Going Long family needs to hear today to minimize the probability of that exact same thing happening to them.
Yeah. Don't think of failures or mistakes as failures. Just think of them as lessons, right? Lessons learned. We talked about earlier, I think one of the biggest things that I would do over is to get into what I'm doing now earlier. But then again, I can't say that because everything I did before kind of molded me to now. So I would say that if you're unhappy, change it. You don't have to be unhappy. Don't listen to all these other people saying, well, no, you got to find a new job before you get a new job, or you got to do that. That doesn't matter. Find your happy spot and go for it. Especially if you're young. Yeah, you've got all the time in the world. Go find what you really want to do, and then learn from the mistakes or failures. Let them be lessons to you, and keep working at it. Keep practicing. I think it was a golfer, Arnold Palmer, that said, the weird thing is the more I practice, the luckier I get. Right. So yeah, just keep working at it, and things will just happen for you. It's really weird, and you may call it luck, or oh, it's so crazy. My business, I was so lucky to be on Billy Keel's podcast that now I'm getting so much business. Well, was it luck, or was it the fact that I put myself out there to be known, to be even contacted by you? So you got to do enough things to be lucky, I guess.
There you go. Don't worry about the mistakes. Keep on doing what you're doing, and the luck will create itself. So yeah. I love that. Makes a lot of sense. And then lastly, JT, man, what is the one book that you would recommend to the Going Long family today?
So obviously Rich Dad, Poor Dad, you got to have that. Richest Man in Babylon, I think, is a great book as well. One thing that really helped open my eyes, it's a book called The 5 Dysfunctions of a Team by Robert Lencioni. Yeah. So I started reading that when I first started getting into a leadership role. Yeah. And that just opened my mind so much, just thinking, you know what? Yes, teams should be working like this. And why isn't there more open collaboration and honesty out there? And so this book will change your mind. It's one of the easiest reads you'll ever have because it's teaching a lesson, but it's also a story as well. Yeah. And so that just kind of opened my mind to how business can and should be run, and why doesn't everybody do it? I have no idea. But if you want a successful business or collaboration with teammates, read this book and you'll understand how to do it.
So JT, if that's all right with you, I'm going to add that The 5 Dysfunctions of a Team, because it's not one that we've heard before. It's one that I've read. That combined with Marcus Buckingham's First Break All the Rules is just like a 1-2 punch. That's amazing, especially when you are in an environment of high performance. Those, the second one we're not going to add on the show notes, but The 5 Dysfunctions of a Team, I think it's one that we'll make sure that we add that to the show notes today. So I cannot even believe that we have gone through this conversation so fast, man. We're talking about you and what was going on with your leg, and we went all the way back to you studying sports and sports science, and then getting into the lawn care industry, and then after that, being in the call center, and that resonated a lot with me because I was working in this for a while. I was also in a leadership role within that environment, and I learned a lot. And you've helped us to recognize that, listen, even though you saw that group that was over in the corner smoking, doing their thing, you decided, hey, listen, you're not going to form and be a part of that gang. You're actually looking for how can you improve yourself, improve the situation, learn, grow. And then from there, you continued to move along that path. You did some door-to-door sales. I mean, that's just something that's amazing as well. And then you decided that you really wanted to get into another space, and that's the risk mitigation space. You've continued to give us really, really great ideas, concepts that we should be thinking about, helping us to understand the difference between, just the specific, especially as we're looking in the real estate space, but we're looking at the property, we're looking at general liability, we're looking at also 2 types of umbrella coverage. You've given us really great specific examples. that people can look to actually as you're reaching out to build the member of your team, not to become the expert, but to become much more informed. And you've helped us along this path today. And you know what, JT, I know so many people that are part of the Going Long family are thinking, oh my gosh, stuff is actually really cool. And it can affect the way that I'm actually being compensated. So let me find out more about this from JT. So can you help us understand, JT, what's the best way for the Going Long family to get in touch with you, to find out more about you so that you can also continue this conversation?
Yeah, the best way to reach me is my email. It's jtlynch, Lynch, at rameyking.com. And that's RAM as in Mary, EYKING.com. And I do something that's a little unique. So when you're doing your underwriting, a lot of people will just put down $400 a door for insurance. Well, when you submit your LOI and you get under contract, what if it's more than that? Now all your underwriting doesn't mean anything, right? So I will actually do free insurance estimates before you submit the LOI. If you email me the rent roll, the T12, and the offering memorandum, usually I'll get back with you within 24 hours and get you a free insurance estimate just to help with your underwriting. I do that for free for anybody. All I ask is once you get under contract, just allow me to quote it and give me a shot.
All right. Fantastic. Well, listen, everybody. And also, too, if you haven't checked out already the video version, you should check it out because all of the things that JT just mentioned, he makes it super simple for you to figure out how to get in touch with him. I'll leave it there. It's just kind of a cliffhanger. So listen, JT, man, I really appreciate you investing your time with me and the entire Going Long family. And I want to thank you very much. Thank you so very much for being with us today.
Yeah, happy to be here. Thanks for inviting me.
All right, fantastic. If you give me like 10 seconds to just say goodbye to the Going Long family. Wow, did you not love that conversation, everybody? I mean, it was just amazing, right? He helped you to think about the way that risk mitigation strategies through insurance can help you understand how this is another important part of the underwriting process, that you are much more informed. Take today's conversation, share it with family, share it with friends, demonstrate that you've learned something that is actionable, that is going to make you a better investor, whether actively, passively, and have the conversation. That's what the whole podcast is about, so that you can become more informed, that you can become a better investor. And while you're doing that, I'm going to be really waiting for you here on the very next conversation. So until then, go out and make it a great day. And thank you very much. Wow, don't you love hearing from top-notch experts in the field? You know, when I was getting started, I really wish that I would have had access to such experts. And even more, I wish they would have given me like a really simple list of things to follow so that I could have gotten to my goals much faster and been much happier even sooner. So that's why I've created for you the 7 things that you should avoid in order to be successful in long-distance investing. And you can pick that up really easily by going to billykeels.com/7 things to avoid. And also, if you liked today's episode, don't forget to leave a 5-star review. I'm looking forward to seeing you on our very next episode, so go out and make it a great day.